What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief analysis on the Ortex short interest and utilization estimates that Ortex has been providing us. Now, we have seen the short interest go over 20% as reported by Ortex. And when you look at those numbers as just the baseline bare minimum of where the potential short interest could be at the current time, it just goes to show that one, the shorts have not covered their positions, and two, they are continuously adding to their shorts, making this potential squeeze that we have going forward even more aggressive. We're also going to do a little bit of a brief option chain analysis going into the end of this week and briefly take a look at what we have going forward into the next trading week. Now, the two main things that I want to go over throughout this update is one, this very interesting BENZINGA article that has come out, and some of the things that they are saying in this article aren't something that we typically see from a major news source. They do mention naked shorting and how it applies to the AMC situation. So we're going to go over that, and I'm going to give my opinion on what exactly we are looking at in terms of what BENZINGA is saying to us in that article. Now, the second thing is that we have somewhat of a $34 trillion problem coming up, and we could potentially be seeing the effects of this starting on October 1st. Now, as I've said before in a lot of my videos, there's not just going to be one key indicator that is going to set off either a major market event or the squeeze, but with all of these different things, the debt ceiling, Evergrande, inflation, the continuous shorting of AMC, and what we are going to take a look at in this video, with all of these things combining together, and especially with where the Fed is going to be taking policy in the near future, it looks like things are starting to really tighten up. A lot of people are pretty worried about where our markets are headed, and I just think it just provides some even more bullish sentiment going into AMC as we see it hanging around and getting very comfortable at this $40 range. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys have seen what's been going on with Cramer on Twitter, and if you see the search results in YouTube, most of the time those CNBC videos get posted ahead of all of your AMC creators. So you guys don't have to do it on my videos if you don't want to, but make sure you guys are engaging with your favorite creators' content so we can get ahead of all of that FUD being put out by those different news sources. So at the current time that I'm recording, we are seeing AMC at $40 pretty much even on the day. Now, when we come over to this Ortex data and we refresh this right here, we can see that the short interest change today, not very substantial at all. Again, it's just flat. We are seeing the utilization at 88%, which again does suggest that these institutions are somehow finding a way to get their hands on more shares to loan out, because we are seeing the short interest almost at all-time highs, with the utilization being at around 88%. We've seen the utilization go up to almost 100% in the past. I believe we touched 100% a couple of times, and the short interest wasn't at this 20% range. So we are seeing more shares out on loan. We are seeing more short interest, but we aren't seeing that reflected in the utilization yet. Now, a lot of people have been talking about this utilization number, including myself, and what this actually means for what we have going forward. In order to see that utilization go up, we need to see more shares go out on loan and more short shares get sold into the open market, meaning that if we are going to see this utilization go up, it's entirely possible that we do see a lot of selling pressure that comes into AMC. But again, that is nothing to be worried about. We are completely prepared for this, and when that utilization gets up to those higher levels, it is going to put a lot of pressure on these institutions and could lead the way for those forced share recalls. Now, when we come over to Stonko Tracker over here and we refresh this page just so we can get an accurate understanding, we only have 14,505 contracts in the money going into the end of this week. So basically nothing really crazy in terms of a potential gamma squeeze. And when we look at going into next week, again, nothing too crazy, but we do have 122,000 contracts out of the money, which if we do see an increase in the price, we would see more contracts in the money. We would see more contracts out of the money as well as people start to gamble on those weekly options, which could add some fuel to the fire in terms of price movements. But again, the next time that we see a big gamma squeeze potential is that January 2021 or 2022 date. Now, moving on to this BENZINGA article over here, we can see that the title of this is Why AMC Entertainment Stock Could Go Bananas. Very interesting title, shouting out the apes. Now, when we come down a little bit further, AMC Entertainment Holdings was trading slightly lower when the markets opened Friday morning, but at 10:15 a.m., bullish volume came into the stock and propped it up. The short interest on the stock has been increasing, and as of August 31st, the number of shares held short came in at about 95.94 million, meaning 18.76%. The figure is up from 85.85 million in July, meaning this is confirming exactly what we have said before. The shorts are continuously piling into their positions in AMC. But here's the interesting thing that they have mentioned. The amount of naked shorting on AMC Entertainment is not included in the number of registered shares held short and could be significant. Naked shorting is an illegal market manipulation tactic where synthetic shares are lent between brokers and large hedge funds. Now, when we think about what we have seen out of the media in the past, especially talking about AMC and GameStop, they haven't been as honest as they should have been. They've been trying to spread FUD, fear, uncertainty, and doubt into the community. We have seen BENZINGA put out both bullish and bearish articles about AMC because when you think about it, there are different authors who are going to have opinions and are going to be releasing these articles. But these comments right here made by BENZINGA are almost as big as when Melissa Lee on CNBC kind of freaked out on air when she was talking about naked shorting and accidentally let that slip out. Now, if we start to see even more positive sentiment coming from the media, that could be a really good thing and a sign of things to come. But again, it doesn't really matter what these institutions at the media have to say about this situation. The apes know what is going on, and they are going to continue doing what they have been doing ever since January. Now, let's get into this pretty significant issue that is going to be taking place on October 1st. So that is going to be next Friday. So what we're looking at here is following its stress test earlier this year, the Federal Reserve Board on Thursday announced the individual capital requirements for all large banks effective October 1st. Those capital requirements ensure that the large banks tested will hold roughly $1 trillion in high-quality capital. We're going to go over exactly what that is, but it would be enough to survive a severe recession and still be able to lend to households and businesses. The language in this is very strange. Now, we've gone over this a couple of times in the past, but I want to make sure you guys still understand this because it is coming towards the time where we are going to see these capital requirements start to take place. Now, let's look at last year's version in 2020 of this same document. Now, when we look here, the Federal Reserve Board announces individual large bank capital requirements, which will be effective on October 1st. Nowhere in here talks about all of these large banks. There's about 34 of them holding $1 trillion in that high quality capital. Now, when we come over here and take a look at exactly what high quality liquid assets are, or HQLA, it means cash or other financial assets that can be easily and immediately converted into cash with minimal or no loss of value to meet a financial institution's liquidity needs. So what this is kind of showing us here is that these institutions and the regulatory bodies at B really are making sure that our large banking institutions are prepared in the event of a major market event happening or another major recession. So we're going to have to see how this plays out, but they are preparing for this. Now, I do want to come back to Ortex very quickly because I forgot today that we actually are getting the exchange reported short interest. We can see here, settlement date September 15th, released today. The shares short 97.13 million compared to 95.94 million before. And the short percentage of the free float, 18.99% and 18.76% previously. So we are continuously seeing the exchange reported short interest rise. So what this basically is the amount of shares sold short that are reported to the exchange. But again, not all of the shares that are sold short are reported to the exchange because that's just not how our reporting instructions and reporting standards are set up at the current time. They don't actually have to report, and the fines for not reporting are very, very insignificant. I looked through this a couple of months ago, and the highest fine that I was able to find for underreporting your short interest or even overreporting your short interest, all of them less than $1 million. That is a drop in the bucket for these institutions. Now, with this number coming out being higher than the previous exchange reported short interest, I would expect on Monday we see an increase in the estimated short interest as a percentage of the free float reported by Ortex. And I think it's possible that we could also see an increase in the utilization because, again, Ortex is just basing their estimates based on the previous exchange reported short interest. And these numbers that we are seeing as released today, the settlement date, September 15th. So there's going to need to be some adjustments made for what we are seeing on Ortex. So that is mainly going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.